Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 5th of January. Starting off with Barron Oil, which has been some people's favourite for the year, 2022, that is. Here we've broken that line of resistance from October, which is handy, at 0.07 pence. Weekly close above the 200-day line, just below 0.08, would be a decent signal that the shares have finally bottomed out and could head up towards at least 0.1 pence initially, which is post-May resistance, best case scenario target over the next 2 to 3 months up to 0.16 if everything goes smoothly. Another stock which has been in the wars but looks as though it's trying to get out of its recent troubles is Block Energy. Here we've got bullish divergence here, even though we had the lower lows for December, higher initial low there for January, I suppose. But main thing is that bullish divergence. We want to see the shares break the 50-day line at 1.16 pence. If they can do that, then we could at least try and fill the gap up to 1.4. And that would be enough to give us confidence that the shares have finally started to bottom out. Stock which was in the top 20 countdown a few days ago, Canadian Overseas, got a bit of kickback from that, but that is life. Here we've got a situation where shares have just sort of started to make the first signs of recovery. So we've got a sort of double bottom there around 16 pence. Bit of bullish divergence there as well, with the RSI starting to push higher despite the double bottom that we had there for the stock. In terms of what we're looking for in terms of the rebound, we've broken that line of resistance there from November around 16.5 pence. The longer we stay above that, the greater the chance of at least a move to the 50-day line at 22.8 pence. And then up to the main near-term resistance at 25. But I suppose fans of the shares would be happy just to get back above the 20 pence zone, which was the old November low, which would then suggest that a bottom is finally in place for Koppel. Stock which I covered again in the top 20 list. In fact, it was the number one. Had a target here of 50 pence, which, just to clarify, is the idea there is that without a sale, the shares could still get to 50 pence. With a sale, obviously, the sky is the limit, so to speak. But in the meantime, we've got that line of resistance there from September. That's around 25 pence, so we need to see a weekly close above that to turn the shares around, even though we've had basically a triple bottom since September at or just above the 20 pence level. So it looks as though the shares have found their base, but still need to push higher through 25 pence in the near term. On to another stock which was in the top 20 countdown, East Imperial, and here the shares up 8% or so, just getting near to that line of resistance there from September. That's the sort of the trigger for, would be the trigger for potential reasonable rally for the shares. So breaking 13 pence in the 50-day line could take the shares up towards the 20 pence area over the following month or two. Good bullish divergence here again, so that's our sort of secret signal. We had a lower low for the end of December, but higher RSI trace, so that does suggest that we are on our way after the bear trap below the initial December floor, and it looks like things panning out in a decent way in terms of that falling wedge rebound that we got from back in July. So 13 pence plus is what we're looking for on East Imperial. Stock which I haven't covered for a while, but looks like it's back in business, at least to some extent, is Gcm Resources. Here, line of resistance from back in March. That's around the 5.25 pence level. We're already above the 50-day moving average at 4.9 pence, and the longer we stay above the 50-day line, with that bullish divergence there as well, the higher RSI low there, the greater the chance of a move towards the resistance line from June, a broadening triangle target as high as 9 pence maybe by the end of February, especially if we can get a decent weekly close above that 50-day line. Mobile Streams is next, going well on the fundamental front, month by month, especially in recent months, but share price fell back from the peaks. I think they were around, 0.65, 0.7, that sort of thing. Looks as though mobile streams though is back now with decent support just below the 0.3 pence level. What we'd like to see now is a decent end of day close or end of week close above the 200-day moving average at 0.34. If we can get that, then it could be back towards that old March resistance at towards 0.5 really. So above 0.3 here, really looking for 0.5 maybe over the next 4 to 6 weeks for mobile streams. Decent update from Nostra, looking forward to events in 2022. I think they've got the prospect of activity in Tunisia on the gas front, so that could help them. But a gap off support, normally quite serious in technical terms, and initial target here 0.45, but that's a level to break. If we can break that on a weekly close basis, then we could be back towards where we were at the beginning of last year, and then that September spike in the low 60s there. So ideally, no fresh lows below 0.3 for NTOG ahead of an attempt at recovery. Nuformix is next, and here we can see that the shares trying to build a base as well. The lower lows, narrow new lower lows, so it does suggest that we've got a base there in at a penny, and above that looking for the 200-day line at 1 3/4, maybe by the end of next month. Big picture target here up to 3.5 pence, but let's just go for 1 3/4 in the near term for Nuformix after the bear trap that we've had from below October support at 1.15. Ideally, there's no break back below that ahead of a potential recovery for the shares. On to Oracle Power, which had a bumper gold update, millions of ounces all over the place, and sort of broken that line of resistance from back in February for the second time now. That's at 0.45 and just above the 200-day moving average. The ideal scenario is that there's no break back below the 200-day line ahead of a potential move to retest the 0.6, 0.65 area, which is post-March resistance for the shares. Fundamentals seem to be improving quite quickly there. More serene chart next from Petroneft. Here we've got a rising trend channel from the beginning of last year. Broken that line of resistance to start the week and the year at 3.9 pence, and above that looking for 6 pence over the next 1 to 2 months, maybe even sooner than that for Petroneft. Finishing off with a stock which has been a consistent riser in recent sessions around the turn of the year. Pharos gapped up through the 200-day line, so 3 gaps up through the 200-day line, so pretty impressive stuff there. Does suggest that there's decent momentum here, and at least while we're above the last gap at 24 pence, looking for the top of the rising trend channel from March last year as high as 37 pence, maybe by the end of February. That's it for me today. More updates tomorrow.